Hello, everyone. Looks like we're live. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 26th, I believe. Yeah, July 26th, 2022. And I'm coming to you again for the second time for the Tuesday live stream. Welcome, one and all. We're going to get started in a second. So bear with me. I'm just going to double check that everything's okay technically and we're streaming. Definitely shout yourself out if you're on the stream, and definitely like the stream if you can on your way in. Okay, looks like we're good. All right. So today we're going to try and be quick and efficient. Right? We all know what the topic of the day is. Everybody's kind of on edge, looking at Bitcoin, looking at crypto in general, and trying to figure out what the hell's going on. Are we going to pump finally, right? After all this carnage. And I mean, this is carnage. Let's turn on our log scale. Look at this. I mean, if you're in this market, you already know. I mean, this downtrend itself has been a how long is this? I don't know why it's not telling me the time. What's wrong with my tool? Okay, one sec. Let me choose another way to do this. I know that the correction, the ABC correction itself, has been 450 or so days. But I want to measure specifically the downtrend. This downtrend, where the hell is... I'm so bad at finding tools on TradingView, especially when I need them. When I don't, they're always in my face. And then I don't think about it. I just click. I don't like thinking. Alright, where the hell is this tool? It's somewhere... kind of remember the icon for it. I'm looking for the time tool. Damn it. And you can make a little toolbar with all your favorite tools, but I hate that because it gets in my way, so I don't do it. I know you can do it, alright? So don't tell me, hey Dean, you know what you can do? I know. I just don't like random floating toolbars. I hate it. Oh man, oh man, oh man. Alright, not here, not there. Yeah, it's here. Date range. Alright. There we go. Okay. So this downtrend's 221 days. Okay, when I say 450 days, I'm referring to this entire move right here. Damn it, where was that? Here. This entire move from the all-time high to where we are now as 450 days. Here in Bitcoin's 432 days, and a lot of altcoins it's around 450 days. So that's what I'm reading, this flat correction right here, and then this 200 and whatever 20-day double zigzag that I'm seeing it as. Okay, I'm seeing it as a double zigzag. It's thus far a double zigzag, I think. WXY, like that. It's heinous. I don't believe that there's more left in this, okay? So, just looking at Bitcoin, you would think, okay, it's not yet done, okay? And some people who believe that we're going to break down from here think this is not yet finished and we're coming down by a lot, okay? For instance, a very, very, very popular analyst, what's his name? Oh God, what's his name? Very popular analyst, goes on Kitco News all the time. Why can't I remember his name? Anybody? Gareth Soloway. That's it. Gareth Soloway. He says that we're definitely... Well, he doesn't say definitely. Let me not put words in his mouth. Let me be fair. He says it's likely that we're going down for this reason. This is his main reason. He's doing his analysis, and he's measuring this move down here, right? This first, what I call the first leg of RWXY, okay? And then he's superimposing this move to this. And so he thinks there's a little left. So he thinks 12.8 is a target, okay? And that may be correct, but I always say, like, actually, if you really wanted to do that justice, it would be a little lower even, right? Because you're not on, or sorry, it wouldn't be lower. You would have already hit your target, because to faithfully represent all this price action, right? From 68, or sorry, where is it? From, 68K all the way down to 18K, or even sub 18K, 17.6, okay? You need to be on the log scale. You can't do it on the arithmetic scale, okay? So this is what I would say to Garrett Soloway. Like, go on the log scale, faithfully represent all of that price action, right? Between 68K and 17.5, and then you'll see we more than met our target, right? If you want to play that game of superimposing the length of the first zigzag from the start of the next zigzag, right? You'll see that, you know, it's been fulfilled. So that's what I'll say to that. Okay, now that's the context. That's where we're at. This is what people who think we're going down believe. A lot of people believe that, you know, what Garrett Soloway says, you know, using that pattern analysis method, it's likely that 12K is a target. I mean, he's a successful trader, you know, he's a veteran trader. I just don't see how you can use, how you can do serious analysis and actually precise analysis not using the log scale on such a big time frame. 1 sec, let me check to see if nobody's got any questions before I keep going. And guys, don't forget to like the stream. If you've just arrived, I will try to remember myself. I always forget to like my own stream. Here we go. Okay, so there's that. That's one thing. So I just don't see us going down any further for that reason. However, it's still possible. It's still possible, right? Everything's on the table. Now, just looking closely at the market, right? Just nothing outside of crypto, nothing outside of Bitcoin. That's my take. I've shared it with you. However, there is such a thing as looking at traditional markets. I don't do it occasionally, or I don't do it often on this channel. I may mention it from time to time, but a lot of analysts will actually look at Bitcoin as well as traditional markets on side to side, like consistently. And what I realized, or what I've realized that they're doing is they're reading something in traditional markets, they're reading something in Bitcoin, and then they'll mold both conclusions to kind of corroborate. They'll make it such that they're saying the same things. I think that's very problematic, right? I am well aware of all of the fundamental macro, like the context, the fundamental sort of macroeconomic contexts and backdrops to our present day economy, what all is going on. But I'm a technical analyst, okay? My thing is the charts. So you don't see me coming on here talking to you about what Tesla's doing and what the Fed's saying and Fed minutes and blah, 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 blah. All that stuff is well and good, but that's not technical analysis, and I do technical analysis. And you got to kind of figure, do you want to do one? Do you want to do the other? Or do you want to do both? But don't say you're doing technical analysis when you're telling me that this is going to go down because blah, blah, blah. That's not technical analysis, okay? However, if we're looking at the SPY, right, or some sort of index fund that's representative of the stock market, traditional markets, I think we can look at both traditional markets and cryptocurrency and still do technical analysis, because my analysis is relegated to the charts, okay? And so that's what I'm going to do today. I'm going to have a look at the SPY and see what I can gather from this price action, what's likely to happen, what's likely to come next, and see if that at all correlates with Bitcoin. But before I do that, I'm going to take a step back and show you why this, like, why can we even do this, okay? What does, I'm not going to assume that, Bitcoin, the cryptocurrencies, and the stock market, the Standard & Poor's 500, right, this index of funds, have anything to do with one another. Although everything in the world is related, right? It's all one world, dollars change to stable coin dollars, and then, right, we invest that into the cryptocurrency market. But let's kind of look and see why we can look at one and make assumptions about the other, okay? Or why we shouldn't, okay? Let's look at that first. And guys, again, if you're getting value, please like, share, and subscribe. All right, so I'm going to refer to this article right here on NASDAQ.com, and it's entitled, "Is Bitcoin Correlated to the S&P 500? It's a worthwhile question. I think a lot of crypto analysts assume that it is. And so immediately they'll make, whatever analysis on S&P, and then they'll just throw it on Bitcoin and say, yeah, see, doing the same thing. Like, you need to ask yourself this question and actually study, why you would even do that, right? So I'm not going to go through this entire article, but the TLDR, and you can read this for yourself, is that according to data, right, because we want to look at data, numbers, Bitcoin started to become correlated to the S&P 500 in the last quarter of 2021, okay? Bitcoin is not that old, right? It's only about 10 years old. 10 years old? 20 years old? About 10 years old, right? Something like that. And so, 2021, that's not that long ago. And so maybe 9-10 years into Bitcoin's history, it's starting to correlate to traditional markets. Fine, we can believe that. And so it says this 90-day correlation between them grew from 0.2. There's a range, or there's a measure of correlation between markets. That's what 0.2 is referring to. No significant correlation to just about 0.6. Fairly strong correlation. So basically, if you read the article, you'll see that there is a measure of how markets are correlated. And since the last quarter of 2021, right, September, October, November, and December, right, of 2021, Bitcoin and the S&P 500, right, representative of the traditional markets, were strongly correlated, all right? And then it hit a 17-month high this year of correlation, right, between these equities. However, historically, in Bitcoin's history, right, 10 to 12-year history, however long you want to count that, it hasn't been correlated to the S&P 500, and it hasn't been correlated to traditional markets. This correlation is only something new. So if you jump onto YouTube and you see somebody analyzing traditional markets and saying, see, traditional markets are puking, and so Bitcoin's going to puke, understand that that's a recent phenomenon. This is recent, okay? And basically, this article says that it's likely, they don't know, obviously, but they're saying it's likely that after all of these external factors kind of renormalize, like we had a pretty crazy few years, right? Really, turbulent and drastic economic changes in the world economy. They're saying after all of this kind of subsides and we get back to a normal, it's likely that both Bitcoin and traditional markets, Bitcoin is essentially like a correlate for crypto, right? So cryptocurrency and traditional markets are likely to decouple as they have been decoupled for the majority of, their history. Okay, but a lot of cryptos are so young that 2021 is like when they first started trading, right, on an open market. So in their lifetime, they've always been correlated, highly correlated to traditional markets. So this is something I don't think a lot of people understand because, again, we're in a new market. So a lot of people, even analysts, are green and they don't do much research. If somebody says it, then they all say it. That person has a lot of subscribers on YouTube or a lot of followers on Twitter. They posted something on Twitter. It must be true. Not nobody, but few people go in to do their own research, as we all say we should do, DYOR. All right. So that's essentially why I'm looking at Bitcoin in sort of with the idea that it could be correlated to the S&P 500 at this point in time because of that 0.6 strong correlation factor. Okay, so that's the background. Now let's jump into the SPY. Okay, and I've got this SPY against the US dollar, yeah, and it's on the daily. All right, and I've done this before. I think I looked at it on a live stream briefly, but it's not something I typically do. I don't even look at this often, to be honest. It's just not something I'm interested in, right? If I'm charting Bitcoin, I could just look at Bitcoin's chart and there, I'll get information. But for the purposes of this live stream, I'm going to chart this, and I've already started, right? I'm counting 5 waves up here in this move that started in March of 2020, okay? So I've got a 5-wave move up, and according to Elliott wave theory, you all know after 5 waves complete, you get 3 waves, all right? And so I'm seeing this move right here, let me get my pen out, as being a small pivot, if you will, right? Price just doesn't up and change direction. You always need to do a reversal pattern and a pivot. That's what I'm identifying this as. Okay, and that lasted what? That lasted all of 42 days. Yeah. Then we started putting some downside price action. We can expect that to happen because, again, after 5 waves, you get 3 in the opposite direction, right? So we see here, let me zoom out just a little bit. We see 1 wave down, right, that I've marked off as my A wave, my initial break of structure. Whoops. A B wave, which is basically a counter to that A wave, okay? And that's a composed B wave, so a 3-wave move. And now you want to count an impulse, right? Because there's always an impulse at the end, right? So we have an impulsive wave here. Now, that to me is complete. However, how do we know? And this is kind of like my process I'm sharing with you guys. How do we know that this isn't just 1 wave of 3? See what I did there? How do we know that this right here isn't wave A, wave B, and then we get our impulse, right? We don't know that yet. But how can we tell? Again, we can fall back on Elliott wave theory. Wave theory gives us some indication, not just for what we can expect from price, but also what we can expect from time. Okay, and that's a more advanced aspect of analysis, but one that is super useful in this case. So let me show you something. So I said we had 5 waves. I counted 5 waves from March of 2020. Okay, so if we time that, we approximately had a 600-day advance. Advance is another name for impulse in wave theory. Okay, so we had about 600 days up. Okay, typically in a 5-wave advance, you can expect 2 of those waves to be correlated in time and in price. You don't always know which 2, but it's usually, in my experience, in crypto at least, wave 1 and 2, okay? So let's go and see. So we don't know what wave this is. I'm going to zoom out a little more to get a little more context, okay? So all we know, I'm going to erase this. All we know is that this is a 5-wave move, okay? We don't have too much context as to what all this is or what comes before here, because this is a really mature market, right? This is the SPF or SPY rather. So this is something that has been going on for quite some time, and I haven't charted it all, nor do I have the interest to chart it all. I'm just going to do a cursory analysis of what we have here, okay? And based off of what we have here, if this lasted, like I said, 600 days, I want to see this correction last something that is not too, something proportional to that. It doesn't have to be 600 days, but it has to be at least, all right, some decent sort of proportion of that, okay? And I'm seeing that it's lasting 200 days, all right? So this right here is lasting 200 days. And what did I say just now? We don't know if this is complete in and of itself or it's one of 3 waves. Remember, because every correction happens in 3 waves or flavors of 3, right? Because, you know, you can have complex corrections that go into flavors of 5 and 7, so on and so forth, but they're all flavors of 3 because we say double 3, triple 3, right? So because this is already 200, this was 200 days, I do expect for a move up. Okay, I do expect a move up. But also what the time component, what time analysis is telling me is that this is one of 3. I need another move here, and I'm probably going to get a proper impulse down. And that impulse is likely to do something like this. Do you guys see what I'm doing here? I mean, this is the power of wave theory. Like, it gives you so much insight, and this is without me even going back and charting the entire asset, right? Or the entire index. I don't need to do that. Even just charting this little bit here, I have so much insight potentially as to what is likely to happen. Let me just put this here. I'm going to change the color for you in a second. Okay. So let's just say this is your initial break of structure to the downside. Do expect a B wave counter to this, but I don't expect this to continue up. And for that very reason that I just told you, this was only 200 days. This entire thing, let's do this properly right here. So this was 600 days, yeah? 600-day impulse, 600-day advance. This, let's start from the pivot, yeah? Was 200 days. I don't expect that to be it, because it's not even close to being proportionally, when you have a retracement, Elliott wave theory states that you need some proportion. It doesn't have to be 1-to-1, but 200 days retracement after 600 days advance is not, that's not what you want, that's not it. All right. So this, I'm going to throw this out there. I'm going to play devil's advocate in a second, because you always want to do that. You want to cover your bases. You want to think outside the box. You don't want to be trapped by your own kind of, oh, this must be that, or that must be this, okay? So let's just run with this for now, okay? Let's just say this entire flat correction, if this is correct, this entire flat correction lasts approximately 600 days. So let's add 400 days to this. So it would be something like this, right? Something like this. And so at the end, when it's all said and done, you would get something like this. Just looking at this right here, not looking at anything else, just looking at this advance and the subsequent, because we got this breakup structure, okay? That's already been printed. So we already know structure has been broken, right? We know that this uptrend has been broken, right? It's no longer an uptrend because we had that A wave, it's complete. So it's likely that we get a counter to this A wave, and then another counter, and then an impulse. We don't have to get a flat correction here. We can obviously get, here, I'll show you so many different things that we can have, and you probably already know. But when it's all said and done, when we take our fib retracement tool, it's likely that this come down, if this is a wave 1, then it, come down to between the 0.5 and the 618. If this is a wave 4, then it come down here. Do you see what I mean? But because of the time analysis, it's highly probable that whatever correction that this is, it's not finished. Okay? So just a little bit of backdrop. That's what traditional markets are likely doing. Okay, devil's advocate real quick. All right, Dean, because you didn't chart the entire wave, the entire asset, you have no idea where you are, okay? You have no context for where you're at. How can you say that, I don't know, you have no idea what correction is coming? Are you, like, what degree and all that stuff? And that's absolutely correct. I have no idea. So let's backtrack a little bit and zoom out just a little, okay? So let's go on the weekly time frame. And I think if you go on the weekly time frame and you look, we can see everything from 1994 until now, okay? Let's agree that this is a massive flat correction. I think that is not something that we can argue about. Let me just pause and check any questions or whatever. Guys, don't forget to like, share, and subscribe. Just check. No questions. Okay, let me carry on. Okay, so let's just say this is a flat correction, okay? And so whatever happened, you're starting from here, right? That was a big correction, and then this is your new kind of thing, okay? So let's start counting from around 2009, all right? So zoom in. Let's just do a kind of rudimentary count. Again, we see a flat correction. Whoops. We see a flat correction here. Let's assume that this is wave 2. Okay, I'm gonna sort of mark it up, and then I'm gonna put the waves in a second. Okay. This is another significant correction right here. Okay. Another significant flat correction. I would say these are the most significant corrections that I'm seeing, right? And again, we don't know. You can continue up ad infinitum because you can have extensions, right? You can have wave extensions. You can have okay, so let's just say this is indeed a wave 2 right here. Let's see if it meets the minimum retracement. Okay, yes it does. Okay, so let's just point that out right here. So, whoops. Eesh. Let's try that again. Wave 1. Wave 2, right? Oh, damn, magnet. Alright, that's close enough. Wave 3. Let's see, right here. Wave 4, and let's just say we're in wave 5. This could be the end of wave 5, we don't know. Not sure. Okay. Now let's take our Fibonacci extension tool just to see if it plays nicely with our expected fib levels. So, okay, wave 1, retracement of wave 2. Okay, wave 3 does end up between the 1618 and the 2 approximately. Okay, so that is a likely wave 3. Do you see how we can do this, and you don't have to guess. And a lot of people think that Elliott wave theory, it's complete bullshit, and that's fine. I'm not here to convince anybody at all. I'm just here to try and make a living. That's it. But that's completely false, and it's lazy, because if you study Elliott wave theory, you understand that not only are there rules, but there are guidelines for what probable waves and corrections can take form, and when they can take place, and how much they retrace, all that stuff. We all know that the Fibonacci extension of wave 1, retracement of wave 2, typically yields wave 3 at the 1618, between the 1618 and the 2 Fibonacci extension. That's exactly what we got. Then we got our wave 4 retracement, and then we typically know that wave 5 typically. So let's actually look at this. Let me erase this for now. Make less noise. I'm gonna erase also this. I'm just gonna clean this up. Just bear with me 1 second. Okay? Bear with me. I'm gonna clean all this up. Okay. We know how to project wave 5. Wave 5 typically, again, that is the operative word, typically extends wave 3, which starts here, okay, right at the bottom of wave 2. Let me try and catch that. Actually, let's first get rid of this. You don't need this anymore. So if we go at the bottom of wave 3, there are 2 ways to project wave 5. This is the first way. Taking the length, oh my goodness gracious, I'm going to turn the magnet off. This is driving me crazy. Okay, manually. All right. The length of wave 3, retracement of wave 4. Wave 4 retraces all the way here. That's the orthodox retracement. And then targeting the 618, okay? That's typically where wave 3 ends. So around 400 on this S&P 500, okay? Around 400. Just keep that in mind, okay? That's the first way to project wave 5. The other way to project wave 5 is to take the inverse 1618 of wave 3. So wave 3, or sorry, of wave 4. So wave 3, so wave 4 starts here and ends there. And the inverse 1618 gives you 350, okay? That's just probable, okay? It's not to say that that always has to happen, right? Because wave 5 can be extended for all we know. We have no clue. And this right here that we're seeing can be part of an extension, right? This break of structure can be the first wave of an ending diagonal. You typically see ending diagonals in these commodities. So a lot of things, all I'm saying is that a lot of things can happen. You don't want to jump to conclusions and say, oh, it hit the probabilistic target of of the wave extension, so therefore I'm gonna take all my money and short it or long it or whatever. You want to be very careful. But just so you understand, it's very likely that we're in wave 5, okay? Probabilistically, we're always dealing in probabilities. There's no magic crystal. There's no 100% certainty, right? In this analysis, I speak for myself. I deal in probabilities. So probabilistically, I'm in wave 5. Probabilistically, given my wave 5 my wave 5 projections, I would not be surprised if this were the end of wave 5 and the 5 waves I counted here were exhaustive. That being said, if this were Okay. This has to be extended. Why? If it weren't extended and this were the end of wave 5, your A wave could not end here. It would have to end around here. Because you have to break the structure. Okay, and right now, the only uptrend that's broken is this uptrend. But remember, if you're in a wave 5 and 5 waves, to break this uptrend, you have to come down here around within wave 4, within the region of wave 4. That's where you typically break the structure of an uptrend. Okay, same with a downtrend. You target wave 4 of the previous trend. Okay, because your initial break of structure went and only targeted wave 4 of this uptrend. Two things are possible. Okay? See, like, this is such a thought exercise, and it's like you don't have to be smart, you just have to be disciplined to do good analysis. You can't be lazy. You have to be really open-minded, and you just have to think, and you kind of go through a process. At least I do, okay? So here's what can happen. Either this A wave turns out to be part of a 3-wave structure, something like this, and then we continue. Okay, that's one possibility. Another highly probable sort of scenario is that this is doing that, and then this would be confirmed an A wave of this advance. Do you see that? Either way you slice it, it's highly probable that for the next 2 to 400 days, the stock market is going up. But the next 200 days following that, we're likely to go down substantially. And if Bitcoin is correlated to the traditional stock markets, then you can expect that same thing. Is everybody with me? Like, I mean, do you guys see where I'm going? Let me just pause and check for questions or whatever, comments. So do you follow that? Two likely scenarios based on my analysis, and I did that all in front of you. I worked it all out in front of you. Okay? Either this is a continuation, this wave 5 is going to continue up however long, it doesn't matter, we don't know, it could be extended, okay? Or that was the probable end of wave 5, because what do we know? Just on the balance of probability, wave 1 and wave 5 tend to be equal or proportional, right? They're usually more or less the same size, and that's what you're getting here, right? Again, always dealing in probabilities. Wave 3 tends to be the longest of the waves. Doesn't have to be, but it tends to be. This is a perfect kind of textbook, typical run-of-the-mill Elliott wave advance, something you see in textbooks left and right. Wave 1 is one way. Wave 2, you get a retracement between the 382 and the 618 of wave 1, right? You got a nice flat retracement there. Wave 3 was nice and long, and you got that, and it's not extended, but it hits between the 1618 and the 2 Fibonacci extension of wave 1. Wave 4 is relatively complex, right? Where wave 1 was simple, wave 4 relatively complex, and it retraced between the 236 and the 382 of wave 3. Prove that to yourself. You go down here. Let's see. Yeah, no, my count was proper, I think. So let's go. Wave 3 would start down here. Oh, no, sorry. Wave 3 starts here for me in my count, and wave 3 ends there. So wave 3 just touched the 236. You see that, right? you came down and you wicked down here between the 236 and the 382, right? Textbook, just like they say in the textbooks. And then your wave 5 ends up to be around 618 of Fibonacci extension of wave 3, retracement of wave 4, or 1618 inverse 1618 of wave 4. This is exactly what you have. And then wave 1 and wave 5 are comparable in size. And then you can, I mean, this is like so textbook, you can even channel it. Let's pull out our channel. So again, I'm pointing all this stuff out not to say this is definitely it, but the more it looks like a duck and quacks like a duck, I'm not going to put my money on the fact that it's a mongoose, okay? I'm going to put a bet, always controlling, you always want to control risk and, not overextend yourself. See, there I go again, not knowing. I can't talk and look for something. That's something about I can do one or the other. All right, let me shut up for a second and find the channel. The channel. Where the fuck is the channel? Oh, here we. No. That's not what I want. Oh man, where is it? Oh, here it is. Parallel channel. And when it's staring me in the face, it's even harder for me to find. All right. So, as I was saying, what was I saying? Oh yeah. The fact, like, when I do my analysis, I don't know for sure, but if it's likely, I'm going to put some money on it, make a bet, either long or short, and that's going to be based off of my analysis, right? It's going to be more likely than not, in my estimation, that X is going to happen and not Y. Okay, but Y can always happen because it's just a probability, it's not a certainty. Okay, so this is what I have where I would channel this, and it's not a perfect channel, but right, because you're on the logarithmic scale, but still, it's not a perfect channel, but it's close, it's close. I think that this is it for the S&P, okay, and that these are the two scenarios right here. Hold up one second. Don't worry, I know they're the same color. I'm going to change that just in one moment. Actually, I'm going to do something smart. Watch this. That wasn't that smart. This is smarter. Yeah. Something like this. You get my drift? Here are my two possibilities that I think are really, really highly probable for the SPY. Like I said, 200 days. We did 200 days down. I think 200 to 400 days up. And why do I say 200 to 400 days? Why wouldn't I say 200 days, 200 days, 200 days? It's because these B waves tend to last much longer than the A wave and the C wave, okay? The C wave is typically an impulse, right? The C wave always has to be an impulse, not typically, it always has to be an impulse, so it's fast. A wave is typically fast as well because it's your initial break of structure. It kind of shocks everybody. It's like boom, boom, boom. It's just, it's relatively swift. The B wave is what takes its sweet ass time, and it comes in all shapes, facets, and colors, and it can be composed, and it goes up and down and up and down. It's just all over the place. But usually you get some version of three waves in the general opposite direction of your A wave. That's what I'm saying. 200 to 400 days up for the traditional stocks. Now, the other thing I'll say, and this is the last thing I'll say before we go back to Bitcoin, is this. And we're going to apply some of this understanding. You can also get something like this. Right? We saw this in Bitcoin. Oops. Okay, so you can also get something like this. Now that wouldn't make too much sense. Oh no, sorry. Yeah. Make it make sense, Dean. Okay, you can also get something like this where you get a zigzag, right? Or you can get a double zigzag like we got in Bitcoin. But no, you can't really get a double zigzag, I don't think, because you don't have a zigzag here. I think this is a flat correction, I believe. Anyway, you can get a zigzag and not a flat. That's all I'll say. And so this B wave doesn't necessarily have to come that high, but it could take its time and matriculate upwards before coming back down. Okay. Anyway, that's my take on the traditional markets. Okay. Now, given that Bitcoin, crypto, and traditional markets are correlated, let's take some of the not conclusions, but some of the insights, yeah, that's the word, insights from our traditional markets and apply that to crypto, okay? And again, this is under the this is with the understanding and with the understanding that they're currently correlated, but it's not necessarily the fact that they will be correlated forever, right? It's just right now, at this point in time, they're correlated. So that we're gonna go ahead and apply some of those insights. Okay, so let's go to Bitcoin. Let's switch to let's stay on the weekly. Okay, log scale activated, so we're all good. Let's hide this for the moment. Okay. And guys, don't forget, if you're getting value, please like, share, and subscribe. And before I get into the Bitcoin, I'm going to, sorry. Oh, 1 second. Hey, I'm on stream. I'll call you guys later.
Oh, okay.
All right, bye.
Bye.
So, yeah, sorry about that. Let me check real quick. Anybody has comments, questions? Okay. Hey, Tato? Tell me how to say your name, please. I hate mispronouncing people's names. But hi. Thanks for joining. All right. So let's look at Bitcoin and see if we can apply this. So let's say that the next 200 to 400 days in Bitcoin were to give us some positive price action. Okay, actually, let's switch charts. Let's go to the master chart. Okay, this chart is more kind of I think it's a better it's better for what we're doing right now. Okay, so 200 to 400 days. Okay, this is my projection for what will come in Bitcoin based off of my analysis of Bitcoin's entire price history. Okay, I've done streams about this. Okay, my main count, and here it is. All right, and in Elliott wave theory, as all of you know, we use degrees. There are degrees. So you talk about 5 waves up, 3 waves down, 3 steps forward, 2 steps back, same thing. And it really depends on if you're talking about a cycle wave or primary wave or intermediate wave or minor wave, so on and so forth. Basically, think Russian dolls. So I've got the biggest wave count is this blue, and then the next is the red, and the next is the green, and the next is this pink. That's the one we're in right now, I think, the minor wave, okay? So I have us in this minor wave. I have us bouncing off the bottom of this channel, and I did Fibonacci time analysis, right? Basically using the same principle that I mentioned when we were looking at the SPY, that in any correction, right, any impulse and correction, you want some parity, you want some proportionality between the impulse and the correction. So we went up here in Bitcoin. Let me get the time tool out. We went up here in Bitcoin from March of 2020, just like we looked at S&P, okay? We went up in Bitcoin for not 200 days, but 300, or sorry, not 600 days, but 390 days, okay? So, sorry, let's get that down. 392 days, okay? So we went up in Bitcoin for 392 days, not 600 days like we did in the traditional markets, okay? 392 days up, and then we started correcting, and that correction lasted... Actually, let's take this down so we don't obscure our site. That correction lasted... I want to take it down to here. 427 days, okay? So you have approximately 400 days up and 400 days down. Do you see what I mean? Like, you see what I'm saying? Like, Elliott wave theory tells us it's very likely if you have an advance, you have a sort of an impulse, and you have a correction that is supposed to be a correction of that impulse, expect parity, expect what they call equality. I say proportionality. When I say they, I mean Prechter and Frost, the authors of the wave theory. It's the de facto manual on Elliott wave theory. I don't agree with 100% of what's said in that manual. Maybe 98%, 95%, right? It's an excellent manual on Elliott wave theory. If you're really serious about Elliott wave theory, you need to understand, you read through, study that text. It's for advanced users, though, not necessarily for beginners. It may be detrimental if you're a beginner and you just jump into Prechter and Frost. There are other books for beginners, like Elliott Waves Made Simple by Steve Sinclair. I always recommend that. I think that's a great book for beginners. Okay, now, so we said we had parity in Bitcoin when it went up from March 2020 and it went down. Remember, the SPY went up for 600 days and has only been down for 200 days. So what am I saying here? I'm saying that the charts, not the Fed, not the war in Ukraine. This is all charts. This is all technical analysis, right? Pure technical analysis. The charts are saying that Bitcoin is ahead of the traditional markets. Do you see how I'm saying that? Why do I say that? Why is that my conclusion? Because the traditional markets are likely going to continue to correct because they have not yet corrected for as long as they advanced, or even close to as long as they advanced. You advance 600 days, expect to correct close to 600 days, not some 200 days. Do you see what I mean? Bitcoin advanced 400 days and it retraced 400 days. It's ready for its next move. Do you see how that works? And this is, again, one of the main reasons I think it's very likely that the next big move is up. And if we're at if we're on the razor's edge, if we're at kind of a decision point, I put my money quite literally on us going up rather than us going down. Because if we go down, I mean, where do we go down to? Right? What's the next move down? So, yeah. The other thing I want to say is this. So, if the stock market for the next 200 to 400 days can go up, although it's still in correction, that goes with what we think is likely to happen in Bitcoin, because we have Bitcoin going up right here for the next 200 days. I promise you, I did not do that in advance. Anybody who follows this channel knows that I did this maybe 3 weeks ago, 4 weeks ago, something like that. I promise you, I did not know that was going to say 200 days. But when I see stuff like that, when I see confluence in my analysis like that, it tells me, okay, you're on the right track. It doesn't mean I'm 100% right, but fuck, I'm close. Right? I'm looking at two disparate, completely separate assets, right? The S&P and then Bitcoin, right? And I'm seeing the S&P go up for 200 to 400 days as a result of my analysis. And I'm not even thinking of where Bitcoin's going. I know, I think that Bitcoin's probably going to go up from here because I've made that analysis. But like the fact that that advance that I have is almost exactly 200 days. And for those of you who are not subscribed who missed that live stream, I calculated it in two ways. How did I calculate the end of this wave 3? Two ways. One, using this channel that you see, okay? Basically, it's the top of the channel, okay? Right? And secondly, or three ways, okay? The top of the channel, one. Two, I use Fibonacci extension, okay? This is the price analysis, right? So I took wave 1, retracement of wave 2, and I took the most likely target for wave 3, which is between the 1618 and the 2, okay? That's where I get my wave 3 right here on this 1618 line, okay? That's the second way I got this wave 3, okay? So there are three ways I'm getting this, right? And the third way, remember, because you don't only analyze as an advanced Elliottician, as an advanced chartist, don't only analyze price, you're also analyzing time. You got two axes. Don't ignore the time axis, okay? Learn your time principles and learn how to use your time tools, okay? Doesn't mean you're going to know where everything goes and when it's going to go. It's not that. Again, you're dealing with probabilities. It's just another data point, okay? So what we're going to do, we're going to erase this, and we're going to use our time tool, okay? And this time tool is essentially just going to measure time and use Fibonacci ratios with time, okay? Just like we do it with price, same shit, okay? So I take the bottom of wave 1, top of wave 1, retracement of wave 2. I'm going to use the orthodox low in May. The orthodox low is May 12th, but because this is a weekly chart, it shows as June, okay? And where does that target line up? With the 618, okay? Boom, the 618, the golden mean. Do you see that? So that's why I think the next 200 days can be bananas. The next 200 days for Bitcoin are likely to be bananas, not just in Bitcoin, but in the traditional markets. However, after those 200 days, right, or so, 200 or so days, we're likely to experience a big drop, okay? And so in the traditional markets, that could be a massive drop, right? But I think it'll be a bigger drop in the traditional markets than it will be in Bitcoin and crypto, because Bitcoin and crypto will be in a wave 4, whereas, well, the traditional markets could also be in a wave 4. I don't know what wave that is. Yeah, they're both going to be retracing. That's all I'll say, right? That's the only conclusion I can make. I can't make any conclusion beyond that because I don't know exactly where we're at in the traditional markets. And I don't know if it's a wave extension. I don't know if it's going to be a retracement of the larger wave 5 waves or the smaller 5 waves, right? Just go into this real quick again. I don't know that it's going to be the blue retracement, right, which is going to take us all the way down to 211, or the pink retracement that's probably going to take us down to 320, right? I don't know. But that's the analysis. That's using knowledge of Elliott wave theory to analyze the SPY, traditional markets, right, and Bitcoin, and then using insights from one, applying them to the other, making sense. So according to our analysis, both will be doing more or less the same thing from here on out. I mean, I think the next 200 days both pump, and then following that both dump. So that's what I'm seeing, and that's why I'm seeing it. Guys, if you got value, please like, share, and subscribe. That's pretty much all I have for today. Hey Gene V, what's up? So yeah, any questions, any comments, anything you guys want to look at? If not, let's just call it a stream. I'm just going to look at Bitcoin on the smaller time frame. What's been happening while we've been streaming, I don't know. So it looks like it's just this range that right here, this range right here, has just been going sideways for almost 24 hours now. Yeah. Let's go into hourly time frame. Let's get off of log. Okay. Yeah, I don't know. I have no idea. Let's look at other assets. Okay, Dodo looks like it's forming a nice rounded bottom. I like that. Okay. Nice rounded bottom. Litecoin, same thing. Nice rounded bottom. I like that. Cardano, same thing. Nice rounded bottom. Ethereum, nice rounded bottom. Yep. And all of these, mind you, are holding their 618s. Meaning, if you pull the Fibonacci retracement tool and they're in a purported wave 2, they're holding that. Do you see that right here? They're not breaking down below that. That's important. That's really important if they're supposed to be in a wave 2. Reserve rights isn't in a wave 2. We knew that though. But it's looking like it's looking promising. It's looking promising. Okay. Kadena looks okay. Looks like we did get a small move up here, but the big question is, can you break this mini range right here? Can you break that? That's what you really want to see. You know, hitting the top of this range doesn't really mean much. Let's see what our momentum indicator says. All right, on the hourly, it's topped out, but let's see on the 4 hourly. Still a lot of room to run, so that's a good sign for continuation to the upside. Ravane, same thing, creating a decent rounded bottom there. Let's go down on the smaller time frames. Yeah, nice rounded bottom. So that's generally what we're seeing on the charts. Nice rounded bottom. And we're seeing a bit of a correction here on the hourly time frame, but it's not like we've made much positive price action, right? But all of these, I think this is the main point. That 618, that golden mean right here, this is crucial support. You don't want to lose that. If the 618 of these assets is lost, then it can get really ugly really fast. Okay, as long as you're holding on to that 618 and you're moving up from that 618, I think you're good. Okay, Bitcoin's pretty much, right on it, just like everything else. I think you're good. Let's look at some other ones. Here's a little hint, or here's a little trick that I do. I go in my general watch list. Okay, that's basically every asset that I've ever looked at or thought about, right? I'm just looking at in this general, right? And so I go and I change the order and see what's run the most, okay? So biggest movers, and I see what they've done. So I zoom out for a second and I see that this DYDX has moved up a little bit, okay? Doesn't mean that it's gonna shoot up and just pump or whatever, but that's what it's doing, okay? It's kind of doing what everything else is doing, except it's ahead. So I use sometimes other assets to see into the future, if you will, right? What's likely to happen. And it looks like this is a big reversal pattern, right? You have your orthodox May 12th low, just like every other asset, or not every other asset, but most other altcoins, right? You have your 3-wave big A, 3-wave big B, right? Then you have what seems to be a 1, 2, 3-wave move here for small a, then you have a 3-wave move for small b. I think that you're getting continuation here, and that's pretty much your reversal pattern. And at the end of the day, that reversal pattern is essentially just one big, in DYDX it is, I found it, guys. I found it, and it didn't take me too long, right? But it's one big inverse head and shoulders, if you don't see it yet, right? It's one big inverse head and shoulders. So that looks like it's likely to continue to the upside. Do you see that? These two portions right here, that's your consolidations. Those are your shoulders, and that is obviously your head. And right here, you're getting a move up from this right shoulder, which is what you want to see in your inverse head and shoulders, okay? So that's what I look at. I just look at the big movers, quote unquote, and what they're doing, okay? And I'm like, okay, if they're doing it, a lot of times what you see in the market is things aren't exactly the same, but they rhyme, okay? So I have this initial break, big A, let's just call it big A, right? Big B. I'm referencing reversal patterns. If you're confused, just subscribe to the channel and you'll know exactly what I'm talking about. I always talk about this, but I use my own terminology because nobody else really talks about this. Ralph Nelson Elliott did discuss it in Nature's Law, The Secret of the Universe, his main treatise, and he referenced it very briefly in a few sentences. He called it AB bases, basically reversal patterns, but he didn't go into detail. And here I've just been studying this for quite some time, so that's what I'm referencing it. If you're confused, okay, and I'm seeing the same thing here. This is a small a, this is your small b, and then you're getting continuation, right? That's what I'm seeing here. So Ethereum Classic put in its reversal pattern. It looks like it's continuing up and out, right? IOST, same thing. You just, May 12th, orthodox low. That's your big A, quite clearly your 3-wave move to the upside. This is quite clearly your big B, 3-wave move to the downside. And then I think you have right here. This is your small A. 1, 2, 3. Boom, boom. Okay, so I think this right here is your small b. And then you're continuing up and out. So this, all I'm doing is I'm looking for patterns. And what I'm seeing from the assets that have moved is promising. Okay, so then the other thing I do is I go all the way down and I see what's been hurt the most. Okay, Uniswap down 10%. Okay, what I want to look for are patterns. Okay, I study this price action. I look for patterns. Like, are you creating lower lows? Are you breaking significant support? Like, are you breaking the 618 if you're in a wave 2, right? That basically for me portends a break in market structure, not just in that asset, but for other assets, potentially. So I look at a few big losers, okay? And, again, identified the orthodox low on May 12th, right? Of our big, I'm basically have been arguing that this has been the low of the market for most assets, May 12th. That was the orthodox low. Not necessarily the nominal low, but sometimes it's both the orthodox and nominal low. Okay, so I see big A here, big B. I see... So this one's a little tricky. Okay, here. It's like a puzzle, right? And so I have this Uniswap being in wave 2. Okay? I see this as wave 2. So this is my biggest loser. Okay? My biggest loser is Uniswap down 10% for the day. And I have it in wave 2. So what I'm going to do is I'm going to zoom in. Whoops. I'm going to zoom in. And I'm going to check for support. Okay, so I'm at the bottom of this purported wave 1, and I mean, come on, guys. You can be a beginner in Elliott wave theory, and you can read this so well because this is very clear. This is clear as day, right? Stevie Wonder could see that count. That's a 5-wave count to the upside, and this should be your 3-wave count to the downside. Whoops. Hold up. Let me make sure I got that right. Yeah, I think that's correct. Okay. And what I want to do is check. And I didn't lose support here. Okay. I'm just always checking for important support. 618, is the 618 held, or is the 618 been breached? Always looking at the, you don't have to rewrite. You don't have to reinvent the wheel, right? The 618 or the golden mean is what you should be looking at for major patterns. Okay, if you're looking at an uptrend and you want to see an uptrend continue, well, that 618 better be held. Same thing, if you're looking for a downtrend continue, it better have not breached the 618 to the upside. So looking at Uniswap, down by the most, 10%. I'm seeing 5 waves up. I'm seeing a bunch of crap down. This actually doesn't even look like a wave 2, to be honest. This looks like a B wave. And I'm going to tell you why. It's because, look, it took you all of 3 days to go up. Okay? And it's taken you almost 3 times as long to correct. That screams either a B wave or a wave 4. Okay? So I think one of either two things. That's a B wave or that's a wave 4. That ain't no wave 2. The time is way off. Do you see it? It's not proportional in time. So yeah. So something about my count may be off. Maybe this wave 1. Sorry, maybe this wave 2, or sorry, maybe this first wave. Nah, I don't know. I have no idea. I don't know. I never look at this asset, but something's off with that proportion of. This can't be correction of just this unless this is wave 3 and this is wave 4, because wave 4 can take significantly longer than wave 3, and that's fine. So yeah. Anyway, what's important here is that you have an uptrend, and the retracement, whatever it is, wave 4 or B, is holding critical, crucial support. Okay, not just structural support from all this jazz, right? Not just retesting that, but also retesting the 618, the golden mean of this uptrend, showing you that it's, even though it's down by 10%, it's more than likely to continue if that holds. Okay, so those are the things I look for when I'm just scanning. Let's just do one more. Okay, Polis down 9%. Okay, almost 10%, right? All right, we're gonna do the same thing. We're just gonna look cursorily at this. Let's assume that this is an uptrend of, an impulse. It looks like an impulse to me. Okay, let's go on log because this is a low cap. Log, and then let's zoom out a little bit. Whoops. Daily. Okay, I don't know what the hell's going on here. So let's just zoom back in, and let's just look at that uptrend. let's not assume that we know what this uptrend is, right? Could be corrective, could be impulsive, doesn't matter. Right, for the purposes of this exercise, let's get off the log scale. And let's go and take our retracement tool from the bottom of this impulse to the top. And again, we're holding crucial support, that 618. You can scan the markets. And even the biggest losers are holding on to the golden mean, I think it's more likely than not that the market is going to continue to the upside. That's how I read it, okay? Doesn't necessarily mean it has to, because it can always lose this, right? It doesn't mean just because you're temporarily holding on to the golden mean that you're going to eventually hold on to the golden mean. You can just retrace at the golden mean, and you typically see this. You see retracements, consolidation at the golden mean before a continuation to the downside. You can see that. But for now, as it stands, nobody's broken the crucial support. But the longer we kind of dilly-dally, hang out down here, I think the more likely it is that we continue to the downside, unfortunately. Whatever that means. Okay. Alright, and I think there's like one or two requests I'm going to look at before I get out of here. Okay, so JY says, think we'll have a drop because of FOMC meeting tomorrow. Also, can you look at DYP, please? Rosa says, we need 28K plus ASAP, otherwise we're going really down. I think so. Yes, I agree, Rosa. I agree. I definitely need it. So let's look at DYP for JY and call it a stream. DYP, I've looked at that before. DYP. Here we go. Okay, so DYP, what we're going to do first is we're going to zoom out, just gain some context. Get on the log scale. Okay, looks like we did look at it before. Okay, just looks like it enjoyed a very nice uptrend in June, right? Thus far, okay, interesting. This, I think, when you get something like this, it doesn't have to be impulsive. Just because it's nice and really strong, good volume, it's an impulse. Doesn't have to be impulsive. Could be an impulse in correction. Okay, we don't know. It could be an A wave, right? Don't know. We don't have too much history on this chart. But let's see. Let's look and let's use our understanding of what's been going on. Right? Most of the market made an orthodox low on May 12th. So let's just say that that's your orthodox low here in DYP as well. Okay? So let's call that big A right here. Okay? This is the counter, big B. No. No. I think this is clear. This is big A right here. Right? Because that was your orthodox low. You get your 1, 2, 3, big A. That's your big move right here. I think what comes next is your B wave retracement. That's what looks like it makes sense to me, right? Something like that. Something like that. It can either be to this region right here, in which case this would be a kind of a zigzag, or down to the 786. But I just, based off of what this has done since May 12th, I don't... Okay, here's another way to look at it. Here's another way to look at it. Here's another way to look at it. Okay, this is also possible. Let me not discount this. This is also possible that we get big A and then, like I said, big B kind of does something like this. But I don't like that. Because the rest of the market, unless it does this, is likely going to do that. And if the rest of the market is going up, I don't see this one tanking, right? Especially since it also shared a May 12th orthodox low with the rest of the market, okay? So I think is more likely than not, okay? Again, this is all probabilities, is that this is your big B right here. And that actually satisfied what I was looking for. I was looking for one thing when I pulled that Fibonacci retracement from the bottom of this big A to the top. I'm looking for a minimum 0.5 to 618 retracement. We all know that the zigzag typically retraces to between the 0.5 and the 618 of your A wave, okay? So that is what I got here. So that to me I think is sufficient for a big B, okay? So subsequent to that, I got another A, a small A, and this is your small B. Yeah, okay. So I like that. I actually like this read best. I like that read best. And then I think that your uptrend is sort of begins around here somewhere. Okay? If it's in sync with the rest of most other markets, you have 2 degrees of reversal patterns. You have your big A, your big B, your small a, and your small b. So your reversal, technically, if that read is accurate, is complete. And then what you get from here is an uptrend of, obviously, the leading diagonal variety. It just looks like a leading diagonal, okay? And so this, to me, looks like your three-wave retracement, your three-wave retracement of that leading diagonal. So what I want to do is I want to jump down into smaller time frame to see if I can't catch where that impulse, if it is indeed an impulse, started. Okay, and I want to say right here. Right here. Reason being, I spy this, okay, this as a flat correction, and I think from here we no longer have corrective price action, okay? And I remember that most of our other assets in crypto started that uptrend on the 13th, and boom. I mean, you can't make this shit up, guys. You can't make this shit up. I didn't try to superimpose my understanding of Bitcoin's market or whatever other market on this. I just did it kind of, obviously it's in my subconscious mind, but I did not know that what I hit on was the 13th. I didn't look for the date, right? Because I can't really see the dates until I scroll. But I think that's a high probability read right there. Again, you don't know for sure, but it's a high probability read. I think what you have in DYP is a leading diagonal that goes something like this. I think that's your leading diagonal, okay? And then your subsequent 3-wave correction should be, we should not be on the log scale. Okay. That's corrective. That's corrective. Because, see, we're hitting the 786. We're hitting the 786. So what that tells me is that this is not a leading diagonal per se, but that this is a pivot. So this is kind of a pivot, another corrective wave up and out. Okay, so this is your A wave. This is, yeah, let's just call it big A, right? And then big B, A, B, something like that, okay? Because, and the only reason I'm saying that is it can't be impulsive because the retracement's already to the 786, and that's a flat correction right there. It's very unlikely that any retracement beyond the 618, especially in that way, is of an impulse, okay? So I think that DYP is yet to put in its first wave, and that it's very close because you see some basing over here. You have potentially already put in 1 degree of this pivot and probably already 2 degrees here. So I think your next big move is up, if that read is accurate, okay? And again, do you see that on the 13th, even though we went up, it wasn't necessarily, I think according to my read, impulsive like it was in Bitcoin or other assets. Not every asset was impulsive, right? But I think Bitcoin and Dodo were impulsive. But because the retracement already came down to 786, I don't think that was impulsive. But I do think that it's probable that the next move is up, okay? And just checking on, let's just turn on our momentum indicator. Yeah, it's likely that the next move is up here because we have some bullish divergence on the hourly time frame, yeah? If you see that. Obviously, you have no really lower lows here, but in the momentum indicator, you have a higher low that's already crossed bullish. So I think the next move is up. Question is how high? How high? But if my reads are correct on this reversal pattern, then it might be a big move. Okay, so that's what I see with DYP. Thank you, Rosa. Rosa says I like your analysis. Thank you, JY. Thank you. Yeah, so that's pretty much all I see. And yeah, that's pretty much it. Let's hope for the best. I don't know, right? Hoping that we will get a move up and out of this pattern right here. And if we did ever do something like here, what we did here, right, this consolidation region, we took our time, came up and went down. Every single time you come down, you try to make a higher high, okay, before you go down. So you come up and you try to make a higher high, you get rejected, okay? Here again, you come up, you try to make a higher high, here's your higher high, and you get rejected. So we haven't even tried to make the higher high here. So I think we come up at least to 21,250, and I think you want to really pay attention once we get to the 21,250 area, what happens there, all right? So yeah, that's it from me. If there are no further questions, take care, everyone. Remember that the hardest thing in trading, whether your positions are large or small, is not necessarily winning or losing, but being consistent and keeping your wits about you. Trading psychology is huge. You want to be. It's not about not being emotional. It's about really keeping your wits about you. And I don't think that there's anything you can do on the charts or like some method you can do to make it so that you're like that. Like you guys gotta like pray or meditate or do whatever the hell you gotta do to just keep stable. And I know that has nothing to do with technical analysis, but it has everything to do with it. Because if you can't keep stable and you know you're a complete mess when price goes against you or when price is right at the boundary and it's about to crash or something like that, like you won't be able to do this long, and it actually isn't worth it because it'll kill you, not slowly, it'll kill you quickly because there's going to be too much stress and it's not worth it. No amount of money, no trade is worth your health. So I don't talk about this enough, but I do a lot. Like in the mornings, one of the reasons that my update is late is because I do meditation and yoga and all that stuff, and I'm consciously doing it because of my job. My job is a high stress job, and when I started my job, I was really stressed out by my job, and I'm less so stressed out by it because I've learned how to manage like the stress. Obviously, I've gotten better. I've gotten better at reading, managing risks, all that stuff. That helps, but you have to be able to manage stress. And I think a big part of that is staying positive, right? No matter what happens, the price goes up, price goes down, I'll be fine. I've managed risk. I'll live to trade again, right? Like you have to be positive, right? And that's another reason why I block trolls, not because I don't want to be contradicted or anything like that. No, I welcome opposing views and opposing ideas as long as they're constructive and everybody can benefit from them. I learn a lot from other people. I'm not always right, believe it or not, and sometimes other people are right where they say things I haven't thought about. So I like that. It's just like when somebody says you're stupid or you smell. It's like, okay, that doesn't really do anything for me. So I'm just gonna block that person, right? So yeah, just try to stay positive, right? Just try to stay positive, no matter the outcome. Always set yourself up for success. Whether you make money, whether you lose money. If you lose money, it's a learning experience. If you make money, great. Try and make more money or do something good with it. But try and stay positive, my friends. All right, that's it from me. Take care. Bye. Oh, don't forget to like the stream on your way out.